Hello. How do I find stocks that pay dividend? We are going to use Charles Schwab in this tutorial. So if you have Charles Schwab, you log in. When you put charlesschwab.com in the browser, you log in. And if you do not have Charles Schwab or you want to create an account with Charles Schwab, you will click on open an account. So once you log into your Charles Schwab account, in the top bar, you will click on research. And under research, you click on US markets. And under US markets, I don't know if you'll have classic view or the current view they have or not, but if you have the option for classic view, you click on classic view. And the classic view is a layout that allows me to find the sector, the company sectors, the industries, and the sub-industries. So under research, US market, and classic view, we can now look for industries. We'll click on industries. And under industries, we will find the sectors. And you can use a spreadsheet to record the different sectors, and I'll give you, if you use a different brokerage account and you don't know your way around that website to find those sectors, I can give you few seconds to record those sectors. And you can record them in a spreadsheet, and you can use them to look for companies within those sectors. And in the previous video, we went under communication service. So in this one, we will go through consumer discretionary. Let me see if I can make it a little bit bigger. So we'll go under consumer discretionary. It has 1,074 companies and 336 are rated. So now that we click on one sector, under that sector we have the industries. And in this one, we have multiples, or there are multiples. 1, 2, 3, 4, 5, 6, 7, 8, 9 of them. And if you are using a different website, a brokerage account that is not a different brokerage firm that is not Charles Schwab, you can take note of those industries as well to do search on them. And in fact, you can even do search on them in Google as well. And even if you have Charles Schwab account, you can track your sectors and the companies in those sectors. So now we are going to go through the first one. So the first industry has two companies. So that's automobile components. So I'm going to click on that. And you can see the link, the location, or the trade. So sector, consumer discretionary, automobile component for the industry. So in that industry, we have one sub-industry, and that's tires and rubbers. So we are going to click on tires and rubbers. And like we said before, it has two companies. And you can see all sector, and that's the consumer discretionary. The industry is auto component, and the sub-industry is tire and rubber. And it tends to give you the graphs for S&P 500 compared to that sub-industry for you to see, how they are performing. But it's not really what I pay attention to. So now that we are in the sub-industry category, you'll now find the companies, and this one has two companies. And we are trying to locate stocks that pay dividend so that we can invest in those. So with Charles Schwab, is now automatically going to give you data based on dividends. So to find that, you have to go to valuations, and you are going to find dividend yield in valuation. So when you click on dividend yield, it's going to sort it out for you from the highest to the lowest. And this one has Bridgestone Corp that pays 3.46%. So when you get to this point, you need to set some parameter for yourself. For instance, you can choose the minimum dividend rates that you are okay with to invest in that stock, in that company stocks. So for instance, I set a parameter here on that stock from companies in businesses before, that have been, like the company that went public before 1990, paying 3% in dividend rate or more, on an annual basis, and they shall show upward growth. You are now going to apply all those filters to the company when we go in the sub-industries. The first parameter you will, in fact, there are some filters that I didn't include here, but when you record your stocks on your spreadsheet, then you can just use those parameters that you set so that you don't lose focus on what you want to invest in. And then I have, a second one, so that after I invest in, I invest in stock using the first parameter, I can go back to my result again to filter, to loosen up the filter and invest in some more that are a little bit more on the risky side, if that makes sense. So you can tighten up your filter and you can loosen it up as well. So when you are in the sub industry, what I like to do is my first because I'm trying to narrow them down, there are a lot of companies that are public that whose stocks are sold on the stock market. So I'm trying to filter them down. So I like to first make sure the company is not an LLC or does not have SA, for instance. And SA will be a foreign company, and it's okay, but depend on which company it is. But anyway, my first requirement is it cannot be LTD, LP, or partner, or LLC. If you are investing in those, they will send you Schedule K1, and you will use it to file your tax return. LLC or partnership companies, they tend to pay high dividend, but you might want to be very careful with those companies because you might end up paying money if they send you a Schedule K1 stipulating that they have profits. But anyway, I'm not going to go much into that. It's just a lot of trouble that I don't want to go to. I have invested in the LLC companies before. A lot of time they will show, losses in their form. But anyway, I just don't want to deal with them anymore. But you can try few if you want to. Another thing that I don't like about them is you'll receive the Schedule K late March. So you have to receive it before you file your 1040 if you are investing in a brokerage account. If you are investing in your Roth IRA, when you receive those Schedule K1 from them, you will need to send it to your brokerage firm, and the brokerage firm will file a tax return for your Roth IRA because of that LLC or partnership public company that you invest in their stocks. You do not pay interest, you do not pay tax on your Roth IRAs, but if you are investing in LLC in your Roth, your brokerage firm will file tax return for your Roth account because of that company, and you could end up paying taxes depending on what is on that Schedule K1. That's all I will say about it. Okay, so my first filter is I want to make sure they are companies. So you will see INC, you will see Corp, you will see CO. I'm okay with those. Okay, so this one is Bridgestone Corp. That's a corporation, and it's paying 346. And based on my filters, 346 is okay. So if you are okay investing in dividend stock that pay 3.46% a year, then you can note it down in your spreadsheet. If you think 3.46% a year is not good for you, then you don't. And you will see the second one does not pay dividend at all. I'm looking for dividend stock. Therefore, I won't do anything with it. It does not mean that that company, that stock is not a good stock is not the point. I'm looking for dividend stock. So if you are looking for dividend stock, the way you are going to gather information on those stocks, or the way you are going to filter those stocks, will be different from if you are looking for the stocks for another purpose. So when you are an investor, that means you are investing in stocks so that you can earn dividend on them, or the stock can appreciate in value over time. So those are the two traits that you look in stocks if you are an investor. If you are a trader, you may not care much whether the company is paying you dividend. You may not care much if the stocks is going to appreciate in value over time, but you'll care more about making profit based on fluctuation in price, in the stock price, in the short term. So the way you are going to pull those stocks for trading will be different from pulling stocks to invest in for capital appreciation over time, or for making money through dividend. And for my goal is to create streams of income through stock investment, and especially through dividend stocks. And that's what this video is about. So if you want to create streams of income investing in dividend stock, then we are not going to bother with the second company because it's not paying us dividend. And based on our parameter, maybe we can set parameter that any dividend stocks 3% and up, it is a good one for us to add to our investment spreadsheet. Okay, so when you are adding it to your investment spreadsheet, you'll add the symbol, the company's name. That's the price that is sold the last time the stock market was open, and then you can record the dividend yield. So those are the information you can easily find on this page. Therefore, you can add them to your spreadsheet. And then if you have like multiple companies on this page, you will do that for all of them. And later from your spreadsheet, you can now click on each one of those companies and do search with them. And we are in automobile. So let me see. Let me search auto. Okay, so let me get this out of here. I have record for them. And okay, I do have this bridge cup. You can see that I recorded the price that it was so selling at the time that I did the record. I didn't put the dates and the dividend yield, and then you can put the sector, the industry, and the sub-industry. Those are the information you are going to put down. So since we do not have a lot of companies in this subcategory, let's go through this one from this. I'm going to click on the symbol. And when I click on the symbol, it's telling me is OTC, is selling on OTC market, and that's another filter that I will apply. So it's selling on a gray market or OTC market, and it's telling you pretty much what OTC, that's over the counter, and I do not want to invest in those companies. But it does not necessarily mean that the company is not a good one. You can choose, and personally I prefer NASDAQ and New York Exchange, but some international companies, you know, might be on OTC. Another things you can look for is, it is an international company, is Japanese companies. I don't really try to get to know the companies when I'm investing in those. I know there is a lot the investment books that will recommend all of those, so you just have to see what works for you. So let's just analyze this company. So one thing we saw is an OTC, therefore I will not choose it, and that alone is enough for me not to do anything with this stock. But let's continue. Second thing is Japanese company. I don't have anything against it. It's just that I'm choosing, you know, companies from the US, and I do have companies outside of the US as well. But you can go down, now that you are inside of that company stocks information, you can look at the dividend yield, and this is a classic view. The classic view can tell you a little bit about the company as well. If you want to read about it, you'll be able to find it. But, and I think usually you'll find it, and that will be the session where you'll find a little bit about the company. But what I'm going to look for is how old is the company. So what I'm going to do is I'm going to click on the chart. We know it's paying dividend, but it's a OTC, it's sold on OTC, and that alone is enough for me to now continue much with this stock. But I'm going to just use it to show you other things you need to apply filter wise. Once you have a good amount of stocks listed on your spreadsheet, that's how you are going to go through them. You want to make sure the chart is maximum. And so it is maximum, and it's telling me that it went public in 2020, in 2002, and that's something we are going to use. That's another filter as well. So new companies is now what we want to invest in. So you have to set your filter, how old you want, or how old you want your companies you want to invest in, how old you want them to be since they went public, or like not really how old, but like the minimum that you won't go past. I don't know if it makes sense what I'm saying. Like, for instance, in my parameter, I think I said 1999 or something, 1990. So anything that went public after 1990, I do not want to consider that. Does that make sense? So you can be more lenient and say 2000 is okay because we are in 2023 and the company has been public for 23 years. That's acceptable for you. That's okay. And for me, it may not be. So you have to set that frame, that time frame that you want to work with. So that's another filter. And you have to apply those filters at different stages of your stock research. So now, let's say you accept 2002 like it is acceptable. So now you are going to apply another filter. Look at the chart and ask yourself if that's a upward growth chart. And I will say it is now. It went public when it was selling at $25, and at this point is around $20. And maybe within 10 years, 20 years, 20 years, right? So if it is at a price that is lower than the price it went public, I will not consider that upward growth. So there are too many filters that this company didn't meet. But that's how you choose your filters. So you will want to pretty much rate your stock that you found. So here I just put not good, but I have multiple options: upward trend, growth and dip, level and downward trend. So you are looking for, so the filter we are setting is, one, the company should not be public after 1990, but it's not. Let's start over. It's not the first filter. One, the company should not be an LLC or partnership. It has to be a corporation. Second, it should not be international companies, or maybe that can have some asterisks on that filter. But anyway, one, it has to be a corporation. And for sure, a corporation, you know that when it's Corp, INC, and also and things like that. But if it's an SA, chances are it's an international company, and you don't know if that's an LLC or that's a corporation. Therefore, I just stick with the terminology that we know in the US that signify a company is a corporation. So that's INC, CO, and Corp. So those are the entity determination that I will look for when I find those stocks. So second, it will pay a dividend, and I'm going with, no, I think I'm messing up the filter again. So when you retrieve your stocks, let's go back. So I think you will filter to have the dividend. So maybe 3% and up is what you are looking for. So that's the first filter you can use to gather, the dividend, the stocks that pay 3 and up dividend rates, annual dividend rates. So the second filter will be the company needs to be a corporation, a CO, a corp, or INC entity, classification that they will have at the end of the business name. So using those two filters, you can then add those companies that met your requirement on your spreadsheet, and you can add the sector you found them, the industry, and the sub-industries. Now that you have a good amount of them on your spreadsheet, you can now use your spreadsheets and search more on those companies. So you will use the symbol. You will go back to Charles Schwab, and wherever you'll find the search bar, you'll put that company in, and we can just search one. We just searched this one and we didn't like it. So let's search this one. Why not? Let's try. So I will copy so let's say you went through multiple sub-industries and you list them down. Now you'll go through, you are going to work by batch if you do not have time. That's the process I'm using. So now that you have a bunch of companies from one industry in your spreadsheet, you can now go back to your Charles Schwab and you just add them to the search bar and you search them. And then when you start searching them, you'll apply the other filters that you have. So, and at this stage, you are going to look for the market they are sold on. And this one is sold on New York Exchange market. So you can note that on your spreadsheet as well. So another things you are going to take note of is the lowest. Let me see here. I'm in the classic view. So the 52 weeks range. So the lowest it can go and the highest it went. The lowest it went and the highest it reached at some point in time. I like to record that. But you won't use this much. It's for reference purposes. So I like to record that. But another filter, you can double check your dividend rates. But now you want to find how old the company is since it went public. So you will use the chart. So one filter was the market the company was selling on, and then you record the 52 weeks low and high. That is not a filter. That filter you will use it when you are ready to invest, but you want to record it. So look at this company. That's what you can tell if that's a definition of upward growth. You can call it upward growth. You can even say growth and dip as well, depending on how you want to name it. But when you see it was public in 1998 and it was here, and I want to make sure it's Mars, and now it is here, I can say there is growth trend in with this company. My only downside here, or the only downside, is the year. Somebody might be okay with that year, somebody may not be, depending on how strict you are on your requirements that you are putting them through, saving them through. But this, I can say growth and dip, depending on the different type of companies that I have searched and what I have found. And I can still say this is an upward growth. And why I will say growth and dip is the up and down that is doing in short period of time, but in long period of time is showing me growth. So and then you'll go to your spreadsheet and you will put it down. I put upward for it, and I have the sector industry for it. So, and then you'll go through those and you'll do that for all the company you retrieve. So now when you have money to invest, you are going to apply another filter. Let's say you have all the, the companies and you want to invest. Now you are going to go back. So far this, is meeting your requirement. You can even put a note next to that in your spreadsheet if that's a company you want to invest in at some point. So let's go back to the summary session, and let's say you have money to invest. So now you are going to apply the next filter, the 52 weeks range. At some point, it reached $65.74, and at some point, it went up to $96.49. So you'll compare that $96.49 to the current price, or you'll compare that $65 to the current price, $87.38. $87.38 and 96, I will say, is close to the highest than it is to the lowest. Therefore, it's not the right time to invest in that company. You can choose to buy just one share to hold on to it, so that from your investment account, they have filters there that you can see low 52 weeks low and high, and if something is on the low side, you can buy more if you want. But if you want to go back to your spreadsheet to do those searches, then you wait. Did you shower? Yeah, you can shower and you get a computer.
But Mommy, Gabby was going to put it and read a book.
Okay, go. I'm recording. So you are going to so it's now the right time to invest in it, because it's on the highest. So that 52 weeks range comes into play when you are ready to invest in the stock, but it does not have to come into play when you are recording those stocks to come back to them later. So instead of searching them and disqualifying them because they are on the high side and then do it over later, it's just better you record them on your spreadsheet and take note of the ones that are good, because later you can just filter them by upward, go through the companies that are upward and check if they are on the low side for you to invest in some of them or not. And the one you invest in, you can just call or code them so that you know that you invest in those already, and so forth. Does that make sense? And when you went through the list of the upward that you have, then you can pick some of the growth and dip, and go through them. Maybe the one on that show growth and dip trend, maybe you can pick a higher dividend rate to invest in those, if you like how long they have been public, how long they have been public. So I don't know if I make sense, but let's say this one, for instance, I don't know if we have the year 2013 is too young, so but let's pick this one, Big Lots. That's like a grocery. I don't know if I will say, I don't know if you know Family Dollar. It's like Family Dollar type. Is sell, I don't know how I'll qualify it, but it's like, yeah, it's in the retail, pretty much general merchandise. So 1986 is good, but it's showing growth and dip, and it's paying 5% dividend. So if what is upward, you are just finding maybe 3%, 4%, 3%, well, maybe you can invest in growth and dip, some of growth and that show growth and dip, but that pay higher dividend. Does that make sense? Not necessarily the one that is paying you 297%. I'm just in target here, but it's up to you. Whatever you say your parameter to be. Target has been public since 1980. So if you think 2% or pretty much 2%, keep in mind that this rate varies based on the price. If the price went up or went down, based on the dollar amount they are paying dividend, the rates will differ. So just keep that in mind. But yeah, you can just record those on your spreadsheet, and when you have money to invest, you can just go from your spreadsheet, do your search, and invest in what you want to invest in. You don't have to go back to the research page and go through those sub industries. So now we work on automobile components. Let's go back. We are going to go all the way back to our sector. So let's go to, we went to automobile components and we found one there, and we didn't try to batch research, and record those dividend stock. We just go through the whole process with that one company we found there, and it didn't meet our requirement. So even though I have it on the spreadsheet, I think I just left there already. So you don't have to put it through all the filters once it fail one critical filter of yours. And the first one that it fell was the OTC. It's sold on OTC. We do not want that, and that's enough. That's where you'll end your research with that company and move on to another company stock. Okay, so now let's go through automobile here. It has 32 companies. So let's see if we'll find, we have 2. Jaden, I'm doing recording. I'm not going to answer questions. So do you want to shower? You go shower and then what? What? Jaden, if you do not shower, you can wait for me to come and shower you, but you do not take your computer until you are done with your shower. Make sure you turn the light off there. Okay, so now we are going to click on the first one, automobile manufacturer sub-industry. Let me see, automobile manufacturer. Anyway, so we scroll down and we have those companies here. Good. So what we are going to do is because it's showing us, some other performance that we are not caring for, we are going to go to valuation and click on dividend yield to filter by dividend yield. So now that we filter by dividend yield, so we are going to go through the highest dividend yield, and we are seeing 1, 2, 3 here that we like. Now that's one filter. So how many there were? 32, I believe. So out of the 32, we filter down to 1, 2, 3 based on 3% and plus dividend yield, annual dividend yield. Out of the 32, we find 3. So now let's see if they are corporation. So out of those are the 3 that we found. So automatically, I won't do much with the last one because it has LTD at the end of it. It does have CO and then it has LTD. I'm not sure why, and I'm not going to use it. And I think it's international companies. And so I don't know for sure if it is a partnership or not, because in the US, Co is company, LTD is limited liability company, so L.L.C. partnership, pretty much. We do have Toyota that is 2.97. It is not a lot, but again, if 2.97 is okay with you, you can accept it. Or better yet, if you like the company and you know the company, at this point you have to know that you have to be aware of the company. If you are willing to accept low dividend rates, it has to be because you know the company and you believe the company will be around and the company is a good company, or you just like that company's products. You have to have a reason. So yeah, Toyota is a good company, and if you believe, they'll continue to do good, and you want to put it through other filters of yours, then you can add it to your list. So that will make it 1, 2, 3, 4 out of the 32, and it is a corp. This one, we are going to eliminate it. It didn't meet our requirement. Ford met the requirement. That's a company. This one has AG. So I don't know if that's a corporation or not. It's international company, but I don't know if that's a corporation or not. So therefore, I'm not going to accepted, even though it's paying a high dividend. Again, the choice is yours. You can invest a little bit in it to see if they will send you a Schedule K1 or not. So, and if you are aware of those entity determination, you can try to figure out if that's a corporation or not. So, okay, but 7% is great. I don't know if that's a corporation. Toyota is international company, but is showing you corp here. So if you don't use Charles Schwab and you want to take note of those companies, you can take note of those companies and search them on the brokerage firm you use to invest in your, to invest. You can search them there as well. You'll find those stocks regardless of which brokerage firm you invest in. If the brokerage firm allow you to invest in single stock, you should be able to. So I'm just going to allow you to take a look at those stocks, and now all of them are paying you dividend. General Motor is here, but it's barely paying you dividend yield. So yeah, I'm just going to, based on our filters, I'm not even, sometimes if it goes to a second page, you might want to click on the second page to see what you'll find there. But those are the companies in that sub-industry, and you have Tesla here. It's not paying you dividend. It does not mean it's not a good company. It's just that it didn't pass our requirement for investing in dividend stock, for with the purpose of generating streams of income through dividend stock. So that means you don't need to sell the stock to get income out of it. At the beginning, you can just reinvest the dividend, but when you need those dividends, you can just turn them off easily on your brokerage account, and when they pay the dividend, it will just be cash in the account for you to take out. So you want to generate streams of income from those dividends. So you are going to be very specific with the goal you are pursuing to select the stock based on that. So in this, we found Ford that was okay. We found Toyota that was okay. So we will keep those. But again, if this INC 2.3% meets your requirement, why not keeping it? You can add it to it as well. So now that we are done with this one, we will get back out of it. I don't know if I will. Pretty much, I think I explained the batch process. You record this to your spreadsheet, and then you will go back up and you'll click on automobile, and we will go to the motorcycle manufacturer sector, sub-industry. And we are going to apply the valuation again to find the dividend yield. And I'm going to just click on it, and I'm not seeing 3% and up here. Therefore, I don't even have to spend a lot of time going through anything here. I'm out of it. So let's go back to our automobile, and let's go back to automobile manufacturer, and let's see. We have Ford. So let's search Ford. So when I'm going to do the search, I'm just going to put F, Ford. Then we can click on it. But when I'm doing this research, I'll go through multiple in sub-industries, industries, and do my recording, and just that's it. Another time I'll come back and I will now search the symbols for those that I put in on my spreadsheet and complete the spreadsheet with the other filters that I'll put them through. So fall is on New York Exchange market. So what are we even doing is automobile, right? So let's search auto again. Okay, let me close it. Okay, so Ford went through, and then if you want, you can put, let me see, market. Yeah, you can put the market is selling in. I don't really do it for all of them. You know, I can just see it. If it's now NASDAQ or New York Exchange, I'll just get out of this and I will go look for the next symbol that met the requirements and search it. But it's on New York Exchange, so it passed that requirement. So what I will do now is you can record 52 weeks range for your reference. But then we will go to, we can double check the dividend. Dividend is 5.31. Was it what it was showing before there? I'm not sure. So what do we have here? Yeah, there I think it was showing 3 point something. Is that true? Anyway, depending on when you are doing your, again, that's an example that it can vary. So dividend, annual dividend 5.31. And now we are going to go to the chart and see if it's old enough, if it passed that age requirement, and what the chart trend is. So we want to make sure it's maximum. Has been around since 1980. It passed that requirement. Now let's look at the trend. The trend, I will say that's growth and dip. That's how I would like to qualify this one, growth and dip. So yes, it started there, and it is where it's selling now is higher than the price it started. But you know, it does go up. It goes down wide, like wide up, wide down. So I will say growth and dip. And the way I like to view this chart is this could be a company you can trade. Better yet, is a company that you want them to pay you dividend, because when you want to sell it, you want to sell it when it's up. You don't want to sell it when it's down, especially comparing it to the price you pay for it. But it is a company that goes up, way up, and way down. So I have a terminology to name those, and that's growth and dip. But again, you can name yours, whatever works for you. So if I'm looking to invest in some of growth and dip type of stocks that pay high dividend, Ford will make that list. And I put their trade. But I think I have some Ford, so I'm going to add a color to it. Okay. But if you want to trade stock though, what I like to look for is comparing the 52 weeks range, the lowest and the highest. When there is a big gap between the two, it is a good one you can trade. So 10 and 1780 is not much of a gap there, really. But if you have a large stock, a large share of that stock, when it goes up maybe $2, when you buy at the lowest and it goes up $2, let's say you have 200 share of it and you bought it at $10 or you bought it at $11 each, and that's what, 1,100, and it goes up. Okay, let's say you have 100 share of Ford and you bought it for $11. You pay 1,100 for it, and the price went up $2 more. Let's say $13. So 13 times 100 minus 11, you make $200. So if if it can vary like that within a month, well, that's okay. But if you had to make $200 after 6 months, I don't think it is. But anyway, for companies that show a lot of growth and a lot of dip, I prefer to trade them rather than having them for a long period of time, for that simple reason that, well, when you want to sell it, maybe it's on the low side. Does that make sense? But again, you have to decide. And I do have Ford. I have invested in Ford and have it for a while before I sold it for a big profit. So, and I think I purchased it again or something like that. But another things that I like to pay attention to is the beta, but I'm not going to talk much about the beta. But the beta can tell you 1.55 tells you that when things are good, this stock will do well. When things are bad in the economy, these stocks will plunge down. So the higher you are away from beta 0, when the economy is good, the market is doing well, the stock will do well. And when the market is doing bad, the stock will go down. So sometimes I pay attention to the beta, but it does not come into my, it does not become a requirement. It's not a set requirement for me. I pay attention to it in some cases as like the last resort to decide if I want to invest in a company or not. If I'm doubting the company, I will use that as the last resort. Okay, so now we are done with Ford. Ford is growth and dip. At this point, you are not really deciding if you are going to invest in the company or not. You are just pointing out, stating the fact. It's showing growth, it's showing dip. So you wrote it down with any other things. So it passed your requirement to be on your spreadsheet. Whether you want to invest in it or not is up to you. It's not upward, which you are looking for. But it's paying you good dividend. It has been around since 1980. It's showing big growth and big dip, and that's the drawback. But it's there, so you can have it on your spreadsheet. So now let's see what else met our requirement here. Okay, so where did we see Ford? Okay, Ford was 531. Okay, that's good. So another one was Toyota TM. So let's go find TM. So we'll go and we'll put TM. And keep in mind you have to search the symbol, not the name. So, and your view, I'm in classic view, so the way things are laid out for me look different from yours. So TM is selling on New York Stock Exchange, but it is an international company and it's Japanese company. Okay, but it's selling on New York Exchange, so that passed that requirement. Is 2.97% dividend. Let's go to the chart and see for how long it has been around and how the growth trend is. And we want the maximum chart that they have in record. And so that is showing maximum. And if you are going to trade on a stock, what you are looking for in chart in a chart will be different. Because I'm an investor, I'm talking about investing long term. I'm looking for long-term growth. If you are trading stock, maybe daily chart, weekly chart might be what you'll be looking for. This is an image of upward trend. It's showing growth. You can see the way this one is compared to Ford. Ford was kind of up and down, quite wide. But you can see this one is showing you that oblique layout of the chart. From where they start, let's see how long they have been around. 1980, that's good. And they have that upward trend. That's even better. So, but it's not paying us a lot. It didn't even make it to our spreadsheet here. But what I can say about this is, if you like Toyota is not paying you a lot in dividend, but you can expect stock appreciation over time because of when they start and where they are. In the 80s is like $23, and now they are selling $133. That is showing you, not only is growth, it's paying you some dividend. So based on that, you can choose to invest in it. If you like that company and you say, okay, it's paying me some dividend while it's appreciating in value, it's good I have some in my portfolio, you can go ahead and include it. That's how you can make exception for some of the companies you will encounter. So let me see here. Toyota TM is selling on New York Exchange. I don't even know what the price is. And at this point, if you are recording those companies, you are not thinking about investing right away in them. How much they are selling at that point may not be relevant to you. But I like to keep those in record. But in reality, those are not going to play a big factor in your search until you are ready to buy them. But right underneath it, you will see the price 133.48, 133 point. Is it 30 or 40? I'm not even sure. 48 and 2.97%. I will say upward. And it is in the same one as Ford. Yeah, and they are both 1980. So why not just copy and paste it there? So, and the reason why it's good to record this industry and the sub-industry is when you are investing, you at some point you might want to know the sector and the industry you invest in to see if you are well diversified. Does that make sense? So it might be a good idea to take note of those sector, industry, and sub-industries that you have been pulling in. And sometimes when you are investing and you feel like, oh, you place order for a lot of automobiles companies. Now you want to try another sector, you can scroll to another one and see, okay, so what can I find in this sector, and invest in that and things like that. So it's good to record those for your own reference purposes. And okay, so we have Toyota is upward, and I don't know, I can make it in red just so that you can stand out. But again, I'm not a big fan of 2.97%. So is there something else that make so let's say you are ready to buy, or you don't want to batch research. If you find something good, you want to place order right away. Let's go back to summary, and you say, okay, Toyota is good, 2.97%, that's okay, and you want to see if you can buy some. Now you will pay attention to how much is selling, 133.48, and what is the low and what is the high, 130.07 and 186. I will say that is a good definition of maybe trading this, buying some and trading. It is on the low side though. It is on the low side, 133.48, and at some point it reached 186. So it's not paying you a lot of dividend, but that's quite a gap between the low and the high, and it pay twice a year, $1.76 a share, or $3.96 a year. And that was the last time it was paid. So you can choose. And when I see this gap between 52 weeks low and high, I would say that's a company to trade. Buy it when it's low, and when it's 170, sell it. If you buy at 133 and it go to 170, because you don't know if it will reach this high again. It could reach it, it could even surpass it. But if you want to make profits, especially it's on the low side, you buy it, and then when it reach 170, you sell it. But before you place the order, you can ask yourself if it's going up. So we are really not talking about trading stock, but if you want to buy, to sell, you want to see the shape of the trend, the chart. If it's going down, then you can tell yourself that it might continue to go down. So on Wednesday, don't know which day was it. Monday is sold at 137, Wednesday 132, and now it's 133. So it reached the lowest. No, the lowest is 130, but it reached 132 during the week. So it's on the low side. You just don't know if it's going to go lower or not, but you know it has potential to go high. So because it's on the low side, if it was me, I will buy. And if I buy with the intention to sell, when it's close to 170, I will sell it. And I don't have problem having it in my portfolio, because while it's sitting there, it's going to be paying me some dividend, but I can trade it and I'm not worried about it, because the chart, when we look at the chart, it shows me growth. So therefore, I know it's going to continue to increase in value. And if I caught it at a low, at a 52 weeks range lower side, that's the best time for me to invest some and then resell it, maybe within a year or after a year or whatever. But with that chart growth, I don't have a problem. When the 52 weeks is showing us, is showing us that is on the low side. And you could place the order and go even lower, but I won't worry about it, because in the short run it goes up and down, but it does show growth in the long run. And not just that, within 52 weeks, it showed the low and it showed the high. Okay, so, and you can see, you know, it was high and coming down. So, but that's that. So let's see, I think that's the last one in this, yeah, that's the last one in this group that we selected. So in this video, let me go back to, in this video we work on consumer discretionary sector, and we went through automobiles, but we didn't, oh yeah, we finished automobiles, but we didn't finish all the consumer discretionary. So okay, so we can just see we went through automobile component and automobile, and that's it. So we still have the others to go through, and we are not going to go through them in this video. So thank you so much for watching, and you can let me know if that's something you are interested in. That way I will continue making those videos to to go through them and see what we will find in them and the type of stocks we will encounter and how much they are paying in dividend. And the way you want, if you are trying to create streams of income through stock investment, and especially through dividend stock, you can, how do you choose the dividend rate you want to work with? So first, go through your budget. If you do budget for yourself, know how much, not necessarily how much you make, but how much you spend in a year. So let's assume for your need, let's assume you have let's see here. So let's assume you have you do budget, and you know how much you spend on your expenses. Okay, so let's use an example here. Just for your basic need, internet at this point age is good one to have at home. So let's add it to the need. So if your budget is $89.99 a month, and phone, $16.91, depending on the carrier you are using, a month. For 2 phone, trash is $20. Gas, you set a budget for 1 cc, and electricity and water 1 cc, and car gas 55, and grocery 300. How much those will be? And we add basic Hulu in it. That's $810.45. So for basic need, $810.45. So then you want to ask yourself, how much dividend rate you want your stock to be paying you to be able to afford 810, let's just say 810 of expenses a month. So what you will do is take 810.45 times 12 for the year. So that's $9,725.45. $25.40 a year for those basic needs. So how much the dividend rate should be for your investment in the stock market should generate $9,725 in dividend a year to provide for those needs of yours. So you'll take this annual living expense divided by that rate, and let's work with 3%. So divided by 0.03, and let me note that. In fact, I don't think I need to note it down, but anyway, so it's giving you $324,180. So if you invest $324,180 in a stock that pay you 3%, maybe Toyota, or I think we came across another one that paid 3%. So you have to invest $324,180 to ensure that you are getting $9,725 a year. So now let's go back to 9,724. Okay, so 0.45 times 12. Now let's work with 5%. If the dividend rate is 5%, was it Ford? Ford was like 5.31, right? So divided by 0.05. So you can see the difference from 300, was it 324,000 or something like that, to 194,508. That's why you invest. So if you invest 194,508 in different type of stocks that pay you in average 5% dividend rate a year, you will get 9,725.40 as dividend from them. So that's that. And then you can invest in some other stocks that, you know, they don't pay you dividend at all, or they pay you some, but you invest in them to trade them. So you are not really investing, but you are trading them. But you know, maybe you trade them twice a year, like Toyota, for instance. You buy a low, you sell a high to make a big chunk of profit and add it to your account. So, but while you are investing in those stocks, the dividend they are paying you will get reinvested. So you don't necessarily have to come with that full 194,000, or you'll reach that earlier than expected. But that's how you do it, and that's based on this calculation that you will set the dividend rate that you do not want to go under when you are selecting the companies you want to invest in, with the sole purposes of generating stream of income through dividend stock investment. So maybe 3% might be too low for you, or might be okay with you, or you might include them, but not all of them will be. So let's go back again with 9,725.40, and let's say you have companies that pay you 7%. Okay, so hold on. So 8.10.45 times 12, okay, divided by 0.07. So 138,934 is what you will invest if you only choose 7% dividend stocks to invest in. So chances are you won't find a lot of them paying you that dividend. Or when you find them, they might have growth and dip in them, but they will have been around. So you can say, okay, I'm going to invest in 7% dividend, and they had to be in the stock market since 1980 or not later than 1990, and they show growth. Wow. They show upward growth in their chart and pay 6+% in dividend. Those you can select those, find them, invest in them, and they say, okay, so now maybe I will go with 5% ones that follow the same trend, or things like that. Or maybe you will say, okay, 7% And plus, they show growth and dip, or they are upward and have been around since 1980 or no later than 1990, and include some growth and dip company in the in your things as well. Because you are not going to sell them, you want to generate dividend through, you want to generate income through dividend. You are not going to worry about when they are down because you are not selling them. But if you are counting on stock appreciation, when they go down, you're worried about losing money if you sell them. Because when they don't pay you dividend, the only way you make your gain or your profit if after you sell. Otherwise, you'll have unrealized gain. Your account is showing gain, but you didn't realize it because you didn't sell the stock. But when the stock is down, then you'll see your account will be in the red for that stock. But then you're worried about, if you name on it, if you are going to sell it at loss because it's down. But if you build your portfolio on dividend to generate stream of income on dividend stocks, then you don't worry about when the stock market is down, because those companies will continue to pay you dividend. Maybe the rate will go down, but you will still get your dividend from them. So let's go to our stock thing. So I've been building the stock worksheet, and the Charles Schwab allow you to export data, and you can export it as CSV, and you can just upload it to the account, and you will be able to pull data. So let's go to the 2000. The latest the company allow me to pull data is 2019. So that means you have to be keeping your own record, because they may not show you. I think the prior year record won't show up. So for this account that I really want to build a stream of income through dividend stock, in 2019 we have $6 in dividend, and that's from Toro. And Toro is a gas company, but that's a French company. And that's Toro. So in 2020, and that's $9, and it could be from the same company as well. Oh, did you purchase the banana?
Yeah.
Thank you. You can put them by the dryer.
Went to Fairway.
Okay. I'm recording. What did you get? What did you get? That's fine. What did you get there? Is it a meat?
5-pound bacon for $15.
5-pound bacon for $15. Was it on sale?
Yeah.
In there? Do you know how much?
Sale. It's $3 a pound.
$3 a pound. How much usually sell at?
Like about $5.
$5. Okay. Yeah, I think that's a good buy.
So instead of waiting for those dollar steak fingers, I just got this instead.
Okay, so you use the meat budget for that, right?
Yeah.
Thank you. You can put it in the freezer.
Next week they have I was gonna get Jonathan apples because they were $1.29 a pound.
Yeah.
I was gonna buy a box.
Yeah.
But next week I see in the ad they have Cosmic Crisp for 99 cents a pound.
Okay.
So I'll get those instead.
Okay. And you got banana design.
Yeah.
Thank you. You can put them by the dryer. I'll put them in the box later. So now in 2020 is $9 from them. And let's write 2021 $9.37. That will be the same company. And it got okay.
Package.
Okay. Is it frozen already? It's not frozen already. Okay, so what I would suggest is put that whole bag in the egg crisper in the fridge. That way I can rebag it before I put in the freezer. Thank you. So it got split. It changed name to TTE. So both came from that same company, and in 2022, and you can see the dividend, the total dividend, 883, and it came from different type of stocks investment. So you can track, your companies to see what they are paying you. But anyway, for analysis purposes, does that make sense? So yeah, I think that's what we will cover in this video. And if that's something you are interested in, please let me know in the comments. I'm thinking about, just continue. Jason. Yeah, I'm thinking about continuing this. Jason, come here. So I'm thinking about continue this video to see what we will find in different type of just give me a few minutes, but stay here. Continue going through those different type of sectors so that we can all see the different type of companies we have in them. Jason, the reason why I called you is I'm just recording this video and I came across Toyota, and let me go back to Toyota here. Is TM, and I'm wondering if you want us to invest in it. It does not pay a lot in dividend, but it is on the low side now. So I want your view on that, if that's something you want us to, if you want me to purchase some of the share. So it is on the low side. In fact, the dividend is 2.97%. So it does not pay a lot of dividend to meet my requirement for what I'm working on for income through dividend stock, but it's 133.48, and it is on the low side. 130.07, 186 the highest. So because of the gap between the two, it will be a good one to trade. And the chart is showing growth in the chart, and because it's selling at 133 now, but the lowest was 130, if we will purchase it, that will be the right time to purchase it. And the chart is, let's look at the chart here. The chart, that's the max, and it has been around since 1980. My only downside here is, the only downside here is because it does not pay a lot in dividend. But you see the chart is a growth chart. So it is a company and it has been around since 1980. So do you want us to buy some of it? If it goes up, we sell it, trading it, or just buy it and keep it? What is your thought on that?
You can end up trading, that's fine.
Trading it? So do you think it's a good one for us to buy some now?
Yeah, seems like it.
Okay.
It's a $50 difference from high to low.
Yeah, so I will place an order for it. I'm not going to place, I think when I place the order, I'm just going to place it maybe for 133.40 or something like that. I don't want to place it too low, and if on Monday it open for 135, it does not buy it. Does that make sense? So something like that. I don't know if I'm placing.
Usually when they usually open low.
Exactly. But I don't want to place the order in a way that if it open higher than that, it does not buy. I don't know if it will continue to go down. I check the 1 week chart. It does not tells me much if it will continue to go down or not. So I don't know. Even if we buy it for 133.48, for 180, for 186 that it can go to, not necessarily that it's going to get there, but
Yeah.
I mean,
You'd probably sell it like 170 or 175.
okay, so if we buy it, we can set the price for 175, and when it reaches that, the Charles Schwab will just sell it for us, right? Okay, so that's what I wanted to ask you. So, okay, it opened. Oh, sorry, 317. So yesterday it opened at 104. No, I don't think that's right. But anyway, it will tell me when I go back to purchase it, to place the order. It will tell me how much it opened and closed the day. But I just want to hear your thought on it before I do that. So that's it. Thank you. I'll let you know if I place the order. And I'll do some sewing before I will come up. Okay. Thank you. So yeah, please let me know if you are interested in me showing how to look for dividend stock to invest in with the purpose of creating stream of income through dividend stock. It's not like you are going to generate a lot of money right away in a short period of time. Doing that is a long run thing. It's a long-term goal. If you are trading in stock, you can make big chunk of profit in the short term, but it is not the same goal when you are investing in dividend stock. It's a long-term thing, but you have to choose the right company and just leave it in your account, and that will continue growing and paying you dividend while you are holding on to it. I just don't like companies that do not pay dividend unless I'm going to trade them, because you have to, otherwise you have to sell it before you realize gain. You have to sell it before you realize that gain. For that reason, while I'm waiting, I want to be generating revenue. There is something else I want to point out. What do you want? I'm not going to comb your hair. Yeah, I'm recording. There is something I like to point out is when you are opening an account with Charles Schwab or whatever brokerage account you are opening. I'm going to use Charles Schwab. If you want to trade individual stocks, you might want to choose a company that will allow you to trade individual stock. Not necessarily all of them do that. An example is T. Rowe Price. T. Rowe Price is good for mutual fund investment. I don't know if they allow you to invest in single stock there now. So with Charles Schwab, you can invest in the stock market. They don't charge you fee anymore. But I think if you buy something from over the counter, they could charge you. Or if you buy something, you buy penny stock, they could charge you though. I don't know. But the few years ago, they took off their fee. So you can buy and sell stocks without paying a fee. So you don't need to wait to have a lot of money to invest. If you have $100 and the company you are going to buy costs, the share costs less than $100, you can buy one share. For instance, if that's on the low side, for the 52 weeks range, you can buy. But yeah, before they used to charge for buying and selling stock, then you have to take into consideration how much you have and all that and how much you want to buy. But every month, you can save some money and purchase some stocks. So if you spend your time retrieving the stocks and having them on your spreadsheet, when you have money to invest, whether it's $100 that can buy a share of something, you can go through your stocks to see which one is on the low side that you can invest in and place the order. So another thing I like to point out is you can with Charles Schwab, you can have Roth IRA, you can have brokerage account, you can even have joint account with your spouse as well. So in your Roth, you can trade stock if you want. You can even invest in dividend stock in your Roth as well. But for generating streams of income through dividend stock investment, I want to do it in the brokerage account. And here is the reason. If you are investing in an IRA or Roth IRA, IRS will tell you, the government will tell you when you will touch that money. And there is requirement. So, and those retirement accounts, they are designed in a way that you spend your money to zero. You have to sell the stock to access the money and all that. So in the Roth, technically you don't pay interest, you don't pay tax on the profit generated inside your Roth. But you cannot touch it until a certain age or 5 years of investing in that account. You can take your capital out. Again, to take your capital out, you have to sell those stocks. Does that make sense? So the government will tell you for those tax advantage account that you can have, the government has a say in it. And Roth is after tax money. When your take-home pay is what you'll invest in your Roth. And when you retire, you will, the gain you have on those stocks, you will take your money out of your retirement account, your Roth IRA, without paying taxes on it. That's great to have it. There is a limit on how much you can invest a year. And you have to read the tax requirement on that, and based on the age as well. I think there is, for some age is a little bit higher. So that's that, and that's great, and it's okay to have it. But to generate stream of income with the purpose of having different type of income streams other than your paycheck that is tied to your job where you trade time for money, I think having a brokerage account when you invest in dividend stock or trade stock might be an option as well. When you trade stock in your brokerage account and you trade stock a lot, it can be a pain when you file your 1040. If you file your 1040 yourself, you are going to record those different transactions, sales transaction in it, and it will be a lot. Somebody is going to file your tax return for you, you will pay a lot for them to do that. So that's why it might be a good idea to trade stock if you are going to trade stock a lot in your Roth IRA for that reason. But if you are going to trade stock, maybe if let's say Toyota is a good one to trade and you think you might trade stock, you might trade Toyota maybe twice a year or once a year, and you pick maybe 3 companies that you want to trade a year in your brokerage account is doable. If maybe you trade each one of them once a year, maybe that's 3 transactions that you are going to enter in your tax return when you file your 1040. So it won't be a lot. It's not like if you are trading daily and you'll have like 365, that's an exaggeration, maybe 300 transactions to enter, that's a lot. So that's something to consider and know what you are doing and the repercussion of it. So another thing to consider is when you are investing in a brokerage account, if that's dividend stock, you will be paying taxes on that dividend stock, even if you reinvest the dividend. So, but in your brokerage account, that's money you can touch. The government doesn't tell you when to touch it. So for 2022, if the total dividend is A83, that A83 will go on our 1040, and it went on our 1040, and you will pay tax on it. be added to, your total income, and then the adjustment will be taking the standard deduction to find the taxable income. So this will be a part of, it will be added to your total year income toward calculation the taxable income. That's something to consider. You will pay tax on your dividends even if you reinvested them during the year. But anytime you want to take those dividends out, you just turn off that dividend reinvestment button on your account. It's a switch, on and and yes switch, and it will be cash in the account and you can take it out. So, and Charles Schwab gives you the option between your bank account and the Charles Schwab account to do those transactions. But again, you can touch that money any point. And if you want to sell stock and take the money to invest in something else like your business or real estate, you can do that with your brokerage account. Government does not have a say on it. As long as you are reporting your dividend in your tax return and pay tax on it, you are doing the right things. And Charles Schwab will have statement. They have statement that will be in the top bar, but they have statement. You will go there and pull your 1099 out to use when you are filing your 1040 and do your reporting appropriately. So, and I think that's what I wanted to cover, that you have the choice to do your investment in your Roth IRA or in your brokerage account. But if you're investing in dividend stock and you want that to be readily accessible for you, maybe your brokerage account might be the way to go. But keep in mind that you will be paying taxes on those dividends, and that's why some investors don't like dividend stock, because they don't want to pay tax on them. They prefer the capital growth, like the way Toyota sold that upward, so that when they sell it, then that's when they made their gain. So when they hold on to it for decades, they can sell it at a higher price and make a lot of profit. But again, you have to sell it, and you have it for decades without making anything on your money. It's like having a land, hoping that in 20 years when you sell it, you'll make a profit. Versus somebody that has a rental property, the house will increase in value. At the same time, is generating rental income for that investor. Does that make sense? So having a capital assets that will increase in value to provide profits when you sell it, and that's only when you sell it, versus trying to generate some sort of income out of that while you are waiting for that to appreciate in value at the same time. And sometimes there could be a trade-off. Those companies that will increase in value may not pay a lot of dividend either. So you have to have a good balance. What is the minimum dividend rate that you are willing to accept if the company is showing you a growth, an upward growth in their stock? What is the minimum price you are willing to accept? And if the company goes up and down, like Ford in this instance that we saw earlier, how much dividend rate minimum you are willing to accept? So you have to set your parameters, otherwise over time you might lose focus on that, and you might go soft on some companies and go hard on some other companies. Tighten up your filter and loosen it up sometimes. So those are things to consider. But having a spreadsheet to track them, you can analyze those as you scroll through them and make your decision. So you can do your research, and later you can go back and search each one of those companies and complete complete your search with how the trend is. And when you batch do your research, you record the company based on the dividend and based on the sectors. And then later you can now batch do the search of individual stock by going inside each one of them and analyze the chart. And based on the chart, because most of the few that you will filter based on the dividend, you will filter them again based on the chart, or you'll filter them again based on the year. So some of them might be upward, but might be too young to meet your requirement, and they don't meet your requirement. And some of them might be good age-wise and have upward trend, and those are the ones that meet your final requirement. And then when you are ready to buy them, you'll compare the price to their low and high and see if that's the right time to invest in that company, or if you need to wait more and keep an eye on it to see when it reaches the low or close to the low side for you to buy it. Thank you so much for watching. I'm Afiavi Liberman, creator of Liberman Consulting L.L.C YouTube channel and NinaSoap.com, our blog. We thank you very much for watching our videos. Thank you for all of your comments, and we thank you all that subscribe to our channel. Thank you.